I'm Yaneli, also known as Miss Be Helpful, with another FinCap Friday brought to you by NGPF. In December of 2020, the initial public offerings of Airbnb and DoorDash kicked the month off with a bang for IPOs. But these are just two examples from 2020. Over $155 billion was raised on US stock exchanges throughout the entire year, which was a record high. But as unexpected as 2020 was, one thing most people definitely didn't see coming was an early valuation of over $100 billion for Airbnb. That's greater than the market value of Marriott, Hilton, and Hyatt hotels combined. What does all this buzz around IPOs mean anyway? The IPO, or initial public offering, is a company's very first time issuing stock to the general public. Before that, most companies start out making deals with investment banks or with angel investors to exchange ownership in the company for money. If you've ever seen Shark Tank, then you know how this plays out. But it's really hard to get money for your piece of ownership in a private company. That's why lots of companies choose to go public. But how does the IPO process actually work? First up, investment banks will underwrite the IPO. That means they determine the valuation of the company or how much that company's worth. Then they buy the shares from that company at a set price and later distribute those shares. Finally, they help the company file with the Securities and Exchange Commission, or the SEC. This way, they can actually get listed on an exchange like the New York Stock Exchange. This process takes several months, and when the shares finally list on an exchange, the company throws a big party, and sometimes company executives will ring the opening bell at the stock exchange where the shares are listed. The media and people tend to build up a lot of hype around IPOs, but this actually leads to a lot of funky stock price movements because the value is being dictated by short-term spikes in demand and the hype around the IPO, and not by business results, which is what actually drives stock prices over time. This was certainly the case with Airbnb. But the savviest investors know that ultimately business results and the decisions that company leaders make after the company has been public for a while, those are the factors that really help investors know if a company is worth owning or not.